Next, transition of GST. That supplementary invoice portion is now end. Just a piece of another documents which we come to know. Now let us come for the new topic. That is what, according to your syllabus, the next topic is transition of GST. Transformation. Transition is a kind of transformation, we can say, from one way to the another way we are entering. From one procedure where we are entering to the another procedure. Transition. How these transitions came to India? What are the effects of this transition? Is it good or bad? So now let us see. It's a transition from traditional tax structure to the GST structure. See, before 2017, there was a tax procedure where each and every stages, the person has to pay the tax, just like manufacturer is there, wholesaler is there, retailer is there, then ultimately the customer. So the phases are different. The manufacturer has to pay the tax. After that, wholesaler has to pay the tax. Again, the retailer has to pay the tax. Then ultimately the customer. So this tax is divided into different parts and ultimately there is a cascading effect. Twice or thrice, the same product we have to pay the tax. That was the traditional process. Before 2017, the traditional process was there where the tax burden on the manufacturer, wholesaler, retailer, ultimately for the entire trading community, the tax burden is too high. They're supposed to pay the tax in each and every level. So ultimately, the one tax is bear by one person, another again for the same product. The another person is also bearing the tax. The third is also the same way, he is also paying the tax. So there is a double, triple type of taxes this for the same product they have to face. And the tax burden is too high. So it was very difficult in those time to do the export and import business as well as here internal interstate business was also not very easy as because every level we have to pay the tax and the amount in that case is very high. It is not economical. Ultimately, the customer has to bear the burden of the tax because we cannot sell the commodity in very less price. We have to pay more on it. So that is why there is a transition position of the GST where this traditional process of tax paying has been transferred to GST, goods and service tax structure, where only one tax has to be paid by the manufacturer, wholesaler, supplier, whatever it is, retailer. Everybody has to pay only one tax. Once the wholesaler paid the tax, manufacturer or the retailer need not have to pay the tax. So it always comes from the manufacturer, then wholesaler, then retailer. But one thing is mandatory. Each and every stage is everybody has to have the GSTIN number. Suppose manufacturer has the GSTIN, wholesaler does not have. In that case, wholesaler has to pay the GST once again. But wholesaler has the GST number. If he takes the goods from manufacturer, then once he submit his GST number to the manufacturer, it automatically will be deducted from his GST return file. I think you are clear about it. Like what I said, if the manufacturer has the GST number, wholesaler has the GST number, retailer has the GST number, what will happen? At first, suppose the manufacturer has already paid the GST, goods and service tax, he has paid. Now the wholesaler is taking good from the manufacturer. Whenever he paid the amount to the manufacturer, the GST will be there. GST, the amount will be written over there. But once he produce his number, GSTIN number to the wholesaler, manufacturer, automatically at the time of return the file, paying the tax, his amount will be deducted. Same way, the retailer, suppose the retailer has the GST number. He is taking good from the wholesaler. So what happened? If he has the GST number, once he purchased the goods from the wholesaler, that his amount will be deducted. His GST amount, whatever is their GST amount, CGST, SGST, central tax or state tax, it shall have to be deducted from his return file, from his tax file. So this is the procedure of GST when it has been taken, transformed to the GST from the traditional tax procedure. But earlier it was not there. Earlier, manufacturer separately, wholesaler separately, retailer separately, everybody has to pay the tax. Suppose the commodity costing rupees, say for example 100 rupees, tax is 110, wholesaler has to pay 110. Again, for retailer, it will become 110, 10% more or 20% more. Suppose 130, retailer has to pay. Again, from the retailer, customer, definitely he will add certain amount of money and it will become 140. Right? For 100 rupees commodities, now he shall have to sell it at 140. But when the GST came into existence from 2017, this cascading effect of taxation has been removed. So ultimately what happened? Only one tax. Suppose wholesaler is paying 10 rupees on 100 rupees, saying that 10 rupees, 110 rupees will continue till the retailer, and ultimately 110 rupees will be the price at which the retailer will get the commodity. So what happened in that case? He can dispatch the commodity, he can sell the commodity by minimizing the costing, by maximizing the profit. Hereby what happened? The retailer as well as the customer, both are beneficial, because retailer will get the maximum benefit, customer will get the commodity at a cheaper rate. So ultimately the number of customer will be increased and retailer will be beneficial by that. So this is the transition of GST when the traditional process has been removed and GST has been introduced. Fine. So provisional certificate of transition in form GST, this is registered 25, it is mentioned. Registered 25 is required for any registered dealer under the VAT service tax central excise duty. VAT is the value added tax. Any service tax, any central excise duty, when this transition of GST came into existence, this is mandatory. Provisional certificate they have to apply. They will get a provisional certificate once they fill up a form, which is there in the registration 25. Remember this 25. This is mandatory for each and every trader. They have to apply and they have to get a provisional certificate to apply for it, to show it as a GST registered person. Fine. For filing registration, it should be within 90 days. Final registration certificate is required. So one is the provisional, another is the final. So to get this GST registration certificate, first of all, you have to apply. Once you applied, you will get a provisional certificate, which is there in the registration 25. After getting the provisional certificate to get the final registration certificate, it takes only 90 days. To get that final registration certificate, what we have to do, there are certain other formalities which shall have to be fulfilled. Within that 90 days, whatever is required by the GST Registration Act. After getting the provisional certificate, certain few forms are there, few norms are there, few forms are there, which has to be fulfilled by the manufacturer or the wholesaler or the trader, the businessman. And once they complete the entire registration procedure after getting the provisional certificate within 90 days, that means within 3 months, The 3 months is required to get the final certificate. So they will be declared as the GST registered person, and whatever the facilities are there in the GST Registration Act, they will get it. So this is the entire procedure of GST registration structure after the transition of GST. If everything is satisfactory, everything is completed, final registration certificate form, what they will get, it is mentioned in REG registered 0.6. See, provisional certificate is there in the registration 25 clause, and the final registration is there in the registration 06. Remember this two clause. One is registration 25, another is registration 0, only 06. And in between this, the number of days is 90 days. The journey from this phase to the ultimate phase takes only 90 days of time after fulfilling all the required documents as well as all the necessary norms. So, this is the procedure of transition from the traditional system to the GST. No doubt nowadays the traditional process is not accepted anywhere. GST is mandatory for each and every business houses. But in case of the sole proprietorship business, to certain extents, if you do not cross the limit of 20 lakhs, GST is not mandatory. But to get the facilities of outside market, GST is required. I can't say that it is mandatory, but it is required. If you do not have the GST registrations, then certain privileges you will not get. Most of the privileges, you can do small business, no problem, but certain privileges you will not get. So that is why it is the suggestion from any trader, any business houses, that you have to have a GST registration certificates. Fine. So this is all about the transition of the GST with when the traditional process has been removed and GST came into existence. Okay. Now, transportation of goods without issue of invoice. So till now what we got? Invoice is mandatory. Invoice is necessary. Invoice should be there. It is must in each and every transaction whatever we made. But see, certain cases are there where this invoice is not required. Few cases, very few cases are there where this invoice is not required. This invoice is the complete documentation where everything has been written clearly about the good which we have sent from one place to the another. But when it is not required, you just see few cases are there where the invoice is not necessary at the time of transportation. Whenever we transport the goods from one place to the another place, one business to the another business, one trader to the another trader, we need a piece of paper which is known as the invoice with all the formalities. But see, some few cases, very few cases, GST taxable person, he may transport the goods without the issue of the invoice. How? Supply of liquid gas, very, very important point, supply of liquid gas. Okay. This liquid gas where the quantity at the time of dispatching, removal is not known by the retailer, by the sender. Sometimes what happened for in case of the liquid gas, if we send from one place to another place, whatever the amount, total amount, it may not be known by the person who dispatched the goods, who dispatched the gas, liquid gas. So this is specifically only for the liquid gas, not for the other commodities. So if it is not known by the person who is sending it at the time of removal of the goods, then this invoice is not required. Remember, liquid gas at the time of removal. 2 points you have to give stress. One is liquid gas. Second is at the time of removal of the gas if the quantity is not known. If they do not know what is the quantity, then only this GST, this what I said, this CST invoice is not required. Next, transportation of goods for job work, any job oriented work, job oriented, okay? If any documentation, documents which is related to the job work, that is, in that case, invoice is not necessary. That means it is service oriented. So two type of goods and services are there. One is goods, physical goods. Another is services. So job work is related with the services. That means in case of service oriented things, job related things, job work, this invoice is not mandated. It is without the invoice also we can dispatch it. Okay. So when it is not required, without the issue of invoice also, we can transport the job work. Fine. Number two. Number three, transportation of goods for reasons other than by way of supply. If it is not the supply of goods, other than supply, any goods if we dispatch, then it is not mandatory to have an invoice. Fine. The last point in case of supply are consign new business. In case of the very new business, it is not necessary. In case of consignment, okay, if one party, there is an agent in between that. Consignment of goods means from one person to the another, goods is transporting, and between one person is there. By adding a certain amount of money, we have to transfer the goods from one person to another. The middleman also will be there. Okay. Here the two parties are there, consignor, the consignee. The whatever it is, in such case, if it is a new business, very new business, and if you are transporting the goods from one place to another, in case of the consignment business, this is for a limited period of time. The consignment is a very small kind of business, and not for the huge or big type of business. This is for a very small kind of goods and commodities for a certain period of time. So in such cases, for a specific commodities for a specific period of time, then in such cases, this invoice is not required. So we got four different cases where invoice is not mandatory. Without issuing the invoice also we can transport the goods. So what are the cases we got? First of all, liquid gas at the time of removal if the quantity is not mentioned. Three things we got. What we got? First of all, liquid gas. Secondly, if quantity is not mentioned. Thirdly, at the time of removal of the liquid gas. First one. Second one, what we got? When the supply of when the transportation of goods for job oriented work, job work. Third is other than the supply of goods. And fourth is when there is a new business, consignment of the new business. So these four cases we already found. For what purpose? Where the invoice is not required. Without issuing the invoice, we can transport, the trader can transport the goods and services. Fine. This is all about the transportation of goods without the issue of invoice.